Hello and welcome. My name's Chris Can with Mining Journal, and with me I have Paul Atherley, who is chairman with Pensana, a rare earth element development group focused initially on its project Longonjo in Angola, but then with one eye on a downstream processing hub in the north of the UK. We've got different interviews that we're looking at the financing of the projects and the downstream hub, but today we're going to look at just Longonjo and the project metrics there and where it fits in with the global rare earth space. Welcome, Paul.
Nice to see you, Chris.
Paul, if we can start on the processing capacities, scoped at 20,000 tonnes per annum of mixed rare earth carbonate, where does Longonjo sit therefore in a global rare earth element supply mix?
So very broadly, the market is around 160,000 tons of what they call NdPr oxide. And at full capacity, Longonjo will produce in excess of 4,500 tons of NdPr oxide. So it's less than around that 5% mark of that overall global market. But more significantly is there are only two operating mines uh, outside China. So essentially, what you're seeing is we could well become one of the very few small number of developments that are able to create an independent supply chain for magnet metal rare earths. And that's the significance of Longonjo. It has incredible advantages that we've got this thing called the Lobito Corridor, which is this Benguela railway line that's been upgraded recently. I think the Chinese spent 2 billion on it, and the US government and a partnership with Moto Engol and Trafigura are going to spend another $550 million on it. That feeds through to the port of Lobito. So once you start with that level of infrastructure, you add to that hydroelectric power and water, it means that the capital cost of the project is orders of magnitude lower than projects most other places in the world. So we've got an initial capital cost of around $200 million. Some equivalent size projects have got capital costs of close to $1 billion. So the orders of magnitude lower capital costs, which gives Longonjo its strategic advantage. And then we're independently owned. That is, we can choose where our product goes to. And we're working with a number of customers in Asia, not just not necessarily China, but also other customers to look to build this independent supply chain for these very, very important magnet metal rare earths.
Okay, and you touched on Lobito, was it? Loboti?
Lobito corridor, yes.
That corridor, hugely significant from my very limited understanding. Can you give us a bit more context around why that's so important?
The broader context of Lobito is there's currently only a couple of railway lines from the Copper Belt going out to the Pacific Ocean. And what a number of the larger companies are looking at is upgrading this Benguela railway line to give access for the Copper Belt to the Atlantic seaboard. Just so happens that our mine is right next door to that and right next door to a station on that corridor. So we get all the advantages of this infrastructure that's being constructed. And it works both ways. Our CEO, Tim George, makes the point. It's not just being able to export the product on the railway line. We are building the mine in a modular fashion, and we can bring the modularized components to the project along the railway line. We can also bring our reagents in via the railway line. So I think, as you know, from Australia and from other parts of Africa, infrastructure and access is absolutely the key for a number of these projects.
Okay, Paul, and that's going to do, as you said, wonderful things for the capex, and I think probably just for your the ease of execution, as you say, in an Africa context specifically. What are the overall project metrics just for Longonjo as a raw materials extraction project before you get into the downstream stuff? MPVs, IRRs, all those things that people look out for. How does it stack up?
Well, the low case, if you take one of the investment banks in London, we took their low case forecasts. It's got an NPV around $600 million. That's the low case. The high case is multiples of that. And it's got a very healthy IRR in the 20s, and it's got a payback of around 3 to 4 years. So we look at the low case, and it's the economics are very strong at the low case.
Okay. And I wanted to ask you about milestones for the project. So you're on the ground. You are already very early stages of prep at the project. What do investors need to be looking out for over the next 6, 12, 18 months in terms of milestones and then catalysts that are going to be really important for overall execution, but obviously share price appreciation?
So we're at financing. So the next set of announcements will all relate around financing, things like offtake, things like announcing term sheets with financiers, etc. So it's all about the financing and building the project. So, so quite literally, we've started building the project. So it'll be we're doing the foundation work. We've done the road access. We've done the sewerage, we've done the power lines. All of that. The next bit is to actually start pouring concrete and steelwork. So hopefully, investors will be able to see financing being announced, which will then translate into concrete and steelwork going on the ground.
Paul, we're going to speak separately about the financing in particular, but then also the downstream project that you guys are so passionate about. But that is all we've got time for today. Thanks very
Thanks
much.
for your time, Chris.